This is USD CHF. Today is Saturday, 23rd of August. This is Friday's price action or setup reviews or trade reviews. This happened on Friday, setting up our entries from around 5. From around, what time is this? From around 10. This review is basically to show you that even with proper price action, you should be able to get or to catch entries that are in the direction of news. Yesterday's Powell spoke and there was news, and this is what caused this impulsive move to the downside. Now, with proper price action, you should be able to get trades in the direction of news when it comes, or even if when that news comes, it should not get you off guard, or maybe should not get stop you out. I will delete everything and then I will show you from beginning. My first here you are looking at this reaction. Where is it coming from? It was coming from a fair value gap, a 1 hour fair value gap from way back from Monday 11th. This is the 1 hour time frame, right? So this fair value gap right here is giving us a solid reaction at this point. Now with this reaction, we get something we call a dealing range, right? From top here to the bottom of this bearish wick. And then now we want to have what we have in this area that what we have. Let me label this 1 hour fair value gap, and then it gives us a dealing range. Giving us this dealing range is we get a premium of this dealing range, a premium of this dealing range. Right there we have 1 hour premium, and then now we want to have price close below it and come back up into this premium, and that is what happened here. Close below and then price wicks back into the premium. Now we are going to the lower time frame. We want to find out what areas of value are in this premium that would want price to come back to. And when we look, we have this fair value gap that is inside this premium, where price is likely to react off of. Now that is not the only area we highlighted. There are others, but we pick this because this is where price gave us a solid reaction from. Now there was also this inverted fair value gap where price would have done something. Probably it did right here and right here, so there was no need for price to come back up to this level again. And then we have now this inverted fair value gap. Just label it, and now we have price closing below the premium range or the premium zone of this dealing range, and then price coming back into this and then reacting off this inverted fair value gap. And with that, it gave us what? It gave us another dealing range for entries. Remember, this is the 5-minute time frame. So you have this candle closing inside the inverted fair value gap, then a bearish candle, another bullish candle, a bearish candle. Now this bearish candle engulfs this previous bullish candle, giving us a change in state of delivery. With this in mind, now we want to have a dealing range from this engulfing candle right here, right? So we can delete this, and then now this price closes below, right? This bearish candle closes, and then the next bullish candle opens and tags the premium zone of this dealing range. At this point, we want to have an entry at this point, right? And then we have a stop loss around 5 pip stop loss, maybe, because we want it to be significantly above this inverted fair value gap. Now with that in mind, we now want to target to set our targets. Setting our targets, we have these laws here. First of all, you want to take partials at 4R or 3R. 4R is at this point right here, just before price reversed, and then maybe 3R, taking your partials at 3R, and then 4R, and maybe setting your trades at break even at that point. Now this is a 5.9R, and you can see price respected this fair value gap, giving us a very clean entry. You can see we had very minimal drawdown on this entry, and then news came at 5 p.m. East African time. News comes, and now we have price flying in our direction, giving us this. If you're bold enough to hold this trade for long enough, you would have held up to this low right here for you to pick now even a bigger risk to reward ratio. Now this is to show you that with a proper technical analysis, you should be able to catch trades in the direction of news. Now you will ask me why I had set my initial take profit at this point. We want to look at this situation right here. Sorry, situation right here. These two candles give us a very interesting scenario. We all know that the natural formation of a candle, drawing up, let me draw up my paint tool. The natural formation of a candle is to have, for a bullish candle, we have a bullish candle, and then a wick, right? And then for a bearish candle, we have a bearish red candle with a wick. But every time we have something like this, right, or something like this, so something like this, you'll notice that this top side does not have a wick, and it is unnatural for a candle to lack a wick, right? This bottom side does not have a wick. So if you have a situation where we have now a candles that do not have a wick at the bottom or at the top, we know that price is going to be drawn to this level where there are no wicks, and that is the situation we have right here. So you will ask me, why did I set my take profit at this point? These two candles do not have wicks, and it is unnatural for them to lack wicks, right? So price will be drawn to these two candles to put a wick there, or this also becomes a draw on liquidity to draw price to it so that it puts wicks on that area, and that is why we had a take profit at that point. With this take profit, that is enough trade for the day. You don't need to hold a trade for long or to try and catch this. Maybe you would have taken partials and then held the rest of the time for this. Now with that done, I want us to relook at this setup in the perspective of head and shoulders. I have already done a video about head and shoulders before. This is typically an ICT 2022 model with a engulfing candle or dealing range theories entry model. So looking at it in a different perspective, we can have a look at it. First of all, just start again from for the 1 hour fair value gap. I said in the video I said that if you are forming a head and shoulder pattern, that pattern needs to form at a key area such as a fair value gap or an inverted fair value gap, right? So we have this, and then price closes into this fair value gap and then drops lower. Now it gives us a what? It gives us a change in state of delivery at this point, not this point but at this point. Now this change in state of delivery will help us define whether this is a pattern or not. Going to the 5-minute time frame, now I want to have a look at what is happening. You see what is happening? This is a typical head and shoulder pattern. You can have a look at it this way: this shoulder drop, and then the head inside a key area, and then a drop, and then a shoulder, and then further drop. Okay, so this is using a circular. This is a shoulder, the left shoulder, and then we have a head, and then we have the right shoulder. If you remember what I said in the previous video about head and shoulder patterns, I said once we have a head and a shoulder pattern forming, and then price breaking below or breaking structure like this, going lower, we are expecting now the right shoulder to come up and form, and this right shoulder needs to happen at a key level, just like this fair value gap here. And now we said this key level has to be either a fair value gap or a breaker block or an inverted fair value gap. Those three key areas are the ones we use. So this right shoulder, where does it form? We have this breaker block here. A breaker block is the last down close candle before a series of candles that goes up to sweep liquidity, and this is the liquidity that was swept. And remember, this is happening at a key level, so it gives us a very strong conviction that price is now going to drop lower. Now as this is happening, we have this breaker block, right? And then you also have this inverted fair value gap. These two areas within the same zone give us a very strong reaction point. And after this reaction right here, now you want to implement an entry model of your choice. Now at this point, you can take an entry based on your favorite entry model. One of my favorites, I have two. One of my favorites is just to wait for a bullish engulfing candle or bearish engulfing candle of this fair value gap, right? And this is the bearish engulfing candle engulfing this bullish candle right here. The moment it closes, you want to take an entry at this point, stop loss about this inverted fair value gap, and you want to set your take profit as you would have, or as I would have shown you before. This is still 5.09. The second entry model that I use as my favorite is, we have this bullish, bearish engulfing candle engulfing this from this fair value gap, right? So at this point is now you want to have a dealing range of this candle to the lowest point because it is engulfing this previous candle. Once this price opens, and this candle opens, it comes to the premium of this range, and that is where we take an entry, giving us this point right here, and stop loss above that point. And then you are now to set your take profit at another level like that, still giving us a 5 point. This one gave us a higher risk to reward ratio of 8.65 risk to reward ratio. Now, so that is the entry model based on the head and shoulder pattern. I will redo this head and shoulder pattern in a much clearer way, but I just thought I should do this in this perspective. That is the trade review of USD CHF. As I was telling you, you can use this as long as your technical analysis is right. You should be able to catch trades in the direction of news such as CPI or other types of news or red folder news. Now this is an example. We also had this example here, the right technical analysis giving us a setup in the direction of news, and then we also have this, the right technical analysis giving us a setup in the direction of news. You can also see this gave us something. And now this, we also had this technical analysis. My entry based on dealing ranges hit stop loss at this point, but this is, I want to believe this is a 1 hour. FVG. But considering this, you would have taken a re-entry based on SMT with Euro JPY. You can see Euro JPY gave us a setup, taking an entry at exactly 4:30 p.m. If you look at it, this point, as you take an entry on Euro JPY, you also can take entry. You can also take an entry on GBP JPY because they move in the same direction at exactly 4:30 p.m. and that gave us another one. This is another technical analysis based on technical analysis giving us a trade in the direction of news. Another one, technical analysis giving us a trade in the direction of news. And then we can have a look at gold. I think gold's price action was not so good. It didn't give us a proper entry, but still you can see price moved in the direction of in the direction we anticipated, because we anticipated for price to react off this 4-hour dealing range and the discount zone of this dealing range and then go up. So that is it. Have a fantastic time and happy trading.